Hello, everyone, and welcome back to another episode of Behind the Sold Sign with your hosts, Justin Saunier and my colleague,
Sheila Kirkpatrick.
So today we are getting into the nitty-gritty of closing costs. This is something that we're often asked, and it's so important because you want to set yourself up for success. And if you are planning to purchase a property, you want to know how much you are going to need at the time of closing.
Absolutely.
The first thing, which would be the expense right off the top, is your 1% land transfer tax. And this is determined by the greater value, whether it's the purchase price or the assessment value.
Yeah, so a great example or a quick calculation on that is think about buying a house that's priced at $300,000 and let's just say the assessment is lower than $300,000. You know your closing costs on land transfer tax is going to be $3,000, which was 1% of the purchase price.
So immediately right then and there, $3,000 going towards your closing.
Yeah. And then we need a lawyer in New Brunswick in order to close a transaction. And lawyers' fees can vary from lawyer to lawyer. So it's always great to get a couple quotes just to check to see what the different pricing is. But when you do ask for your quote, you want to know the cost of their fee as well as the disbursements, because the disbursements are far greater than just what their fee is. And that's where you can sometimes be surprised when the big final bill comes in.
Yep. So another closing expense would be the home inspection. So this is something the buyer specifically pays for.
Yes.
And this can run you anywhere from $500 to $1,000, depending what services you want included within that inspection.
Yeah. And then another fee that is buyer driven is whether you're going to require an appraisal or not. Mm-hmm. So when an appraisal is required, it's good for you as a buyer to know, are you responsible for that fee or is the lender? So make sure you ask that at pre-approval time.
Yeah, and an appraisal can cost you anywhere from $300 to $500 typically. So another closing expense would be the default insurance.
Oh, that's a big one.
Yeah, so this is something your mortgage provider would talk to you about at the beginning of your pre-approval process. However, it's something that is often forgot about because it's just included right in with that mortgage.
Yes, exactly. Next, we have title insurance. So that kind of takes us back to the legal conversation. And when it comes to title, you have the option to either have a survey or get title insurance on the property. You need one of those two items at closing. Most time people will go for the title insurance because it's a lot cheaper than purchasing a survey. And getting the title insurance, there's two policies that you're going to want. You're going to purchase the one for yourself, but you're also going to purchase the one for the bank.
Yes. Another expense would be your adjustments. So this could be propane tanks, oil tanks. It could be your property tax, depending when in the year you close on the property.
Yeah, so that is the one that you can likely save the most amount of money on. Because when it comes to adjustments based on the time of year, if you decide to say there's no adjustments for oil, there's no adjustments for propane, there's no adjustment for property tax, then there is no adjustment for those and you're not spending that additional money. So that is the closing cost that you can possibly save thousands of dollars on. And then we have GST or HST on a transaction. And that is very specific to the type of transaction, but you do want to know whether you have to pay for it or not. So on your contract, there is something that says included or excluded. Mm-hmm. And just make sure you pay attention to that and know if there's new construction, whether it's applicable, if there's a rebate that's going back to the builder, if you're purchasing land, are you going to have to pay that
HST on top of the purchase price?
Yes, exactly.
Yeah. And then another one would be your moving expenses.
Yes.
So deciding whether or not you want to have professionals help you or if you're going to do it yourself.
When it comes to the moving, if you're going to hire a company, it's going to cost you a lot more than if you're moving yourself. However, there's more work in moving yourself. One of the things that we would like to share with you is that we have a moving truck. And with our moving truck, we supply the truck, the driver, the gas. And what are you responsible for?
The manpower. That's it.
That's it.
It's a good trade-off.
Yes. So you would book that through our company and that truck would be available to you at moving time.
Those were essentially the most common closing costs for buyers. So now let's get into the closing costs for the seller.
I'm going to call these a little bit more like seller's expenses. Some of them are closing costs and some of them are, I'm going to say, the cost of doing business for the seller. First off, again, we have legal fees. One of the things that's interesting with the legal fees is that we don't have all these big disbursement fees that we have on the buying side, but you still have a transactional fee and there's a transfer of a deed that you're responsible for. And the closing costs when you're selling versus when you're buying are substantially lower, even just the legal fee itself.
Yeah. And then there's also the real estate commission. So depending what the vendor and the real estate professional at time of listing agree upon,
Yeah.
you are responsible for paying that percentage upon closing as well.
Yeah. And then you would have mortgage penalties potentially. So one of the things that we always want to prepare our vendors for before sale is to contact their mortgage institution if they have a mortgage, and to ask the question, if I were to sell my house today, what will my payout be? Because you want to know if there's going to be any interest and penalties that you're going to incur. And with the differential in interest rates and so many other things that can happen with mortgages, they can vary a lot. So it's good to have that information before you even list your home.
Agreed.
Yeah.
Yes. There's also the home staging repairs bracket, which kind of falls into the cost of doing business, like you were saying.
Yeah.
So if you wanted to have your home stage or repair some things, you would do that beforehand.
Yeah.
Not really at closing.
Yeah. And depending on the type of property you have, you may have to pay some capital gains. So it's important for you to talk to your accountant and know if there's money that's going to have to be set aside for a later date when the government comes after you.
Yeah. Yeah. And that's a good one too. And then lastly would just be the moving expenses on the seller side.
Yeah.
So again, deciding if you are going to hire professionals or if you're going to kind of maneuver this.
Or use our truck.
Or again, yes, or take our truck.
Yeah. And there may be some disconnection fees that are associated with transferring or closing things out.
Yeah.
But what you'll see between the two situations, buying and selling, it's the buying costs that at closing time that can kind of be that, oh shoot, why wasn't I prepared for this? So it's important to know that even if your lending institution tells you that you need 1% of the purchase price for closing cost, that is likely not the case. And it could go anywhere from 1.5% to 4%. So the better that you are prepared for this, and you can get all this information beforehand from your lawyer. They can get this information for you.
And highly recommended.
Yeah, absolutely. So thank you again for tuning into Behind the Sold Sign. We are absolutely loving the questions that we're getting from people that we know, people that we don't even know.
Yes.
This has been so fun for us.
Yep.
But we're loving the questions, so keep them coming because we want to give you the information that you want.
Absolutely.
Yeah.
Make sure you like, share, subscribe, and we look forward to seeing you again next week.
Sounds good.
Thanks, guys.